Government and Nonprofit Accounting, Accounting 422, Chapter 7. In Chapter 7, we look at proprietary funds. So proprietary funds for a business are funds that look more towards business type activities. And because they're business type activities, the accounting for proprietary funds looks more similar to that of business accounting than a lot of other governmental activities and funds. These type of accounts look at assets and liabilities related to their operations, and how these funds operate is they are normal activities of the government for which the revenue generated is to pay for the costs of the activities. These are things like IT, which provides services to the government. They charge user fees then to the different departments in a way to make sure that they're generating enough revenue to cover their costs. So there are two types of proprietary funds. We have internal service funds, which are types of entities that provide a service internally, such as IT. And then enterprise funds, which are things like public utilities, airports, golf courses, garbage, that provide services to the public for a fee and then are also available for use of the government for a fee. For example, a water utility. Citizens within the city limits, state limits, utilize water at their properties. They pay for that water utility and pay for that fee. Additionally, government buildings also utilize water and pay money to the water utility. Proprietary fund has three financial statements that they need to use as part of their financial reporting. So a statement of net position, statement of revenue, expenses, and changes in fund net position, and a statement of cash flows. And the reminder that each of these, even though these look like business type activities, that these statements of these entities have to follow GASB regulations and not FASB regulations. So the statement of net position, very similar to what we've seen in previous chapters, where it is similar to a balance sheet. Okay, so this is our assets, deferred outflows of resources, and liabilities. Then our statement of revenues, expenses, and changes in fund net position, which is very similar to a income statement. Following GASB standards, of course, we show, instead of having bad debt expense like a business would, for a governmental entity, for a proprietary fund, what they actually need to show is net of any potential bad debt. So what they have to show is a contra account, or a contra revenue account. Then the statement of cash flows. So some differences in the statement of cash flows under GASB versus FASB is that GASB requires the direct method. They do not offer a choice for companies of either the direct or the indirect method, but they require that the direct method is used. We have cash flows from operating activities, financing activities, and investing activities, similar to a business's statement of cash flows. Of course, the cash received that we can get is from user fees, any taxes, interfund transfers, things like that. Additionally, for financing activities, that gets separated into non-capital financing activities and capital financing activities. Then our investing activities looks at loans, interest, and dividends, etc. Proprietary funds are not required to have a budget. They can have a budget, but it's optional and it's not required. So therefore, one of their financial statements that is not required is a budget to actual. However, as proprietary funds falls under governmental activities, at the higher level governmental activities, government funds, that would have a budgetary, but the proprietary fund itself would not have a budgetary component. Okay, so we're going to look at the two different types of proprietary funds. First, an example of an internal service fund, and then we'll look at an example of an enterprise fund. One of the reasons that an internal service fund is created is to improve financial management of government resources. So by giving one body control over an internal service fund instead of having multiple funds controlling their own purchases, etc. So one of the funds we're going to look at is a supplies fund or a purchasing fund. So when we let all of the departments manage their own, we can have a lot of duplication of effort. We're missing out on cost saving opportunities through bulk purchasing because every single entity in the government is buying their own, where by aggregating it together, we better use our resources. We keep control over what's happening inside that fund, and we have a better idea of exactly how the government wide is utilizing supplies and spending money. So that's just one example of an internal service fund. So of course, the main objective of an internal service fund is to generate enough revenues to maintain their operations. So they want to be able to cover all of their costs, to cover all of the materials that they need, and to cover their regular operating activities, which is, this talks about needs for future equipment and replacement, but not for capital stuff. So everyday use of equipment and supplies, but not their own capital budgeting processes. So capital budgeting, even for a proprietary fund, would take place outside of the proprietary fund at the government wide level. Okay, so we have the next couple of slides. Follow the example in your textbook about the Town of Brighton Supplies Fund that is established by a transfer of cash and supplies to the fund. So what they have done in this example is created a purchasing department which manages all purchase of and distribution of supplies for the entire government. The transactions that follow are examples of individual transactions that happen both at the level of the internal service fund, the supplies fund, and at the governmental activities level. First, we have the establishing of the fund, purchasing of the fund, capital things that we get, land, buildings, equipment that we need in order to maintain this fund. More details about each one of these individual transactions is in your textbook in Chapter 7 reading. Then we get into the actual everyday activities of the supplies fund, where they have purchase supplies from vendors, they have vouchers that are payable, they pay the vendors and manage their everyday operating activities. Then after their operating activities, they would have the financial statements that they need to create for this internal service fund. And those financial statements are also included in and described in your textbook. So for those external reporting needs, they generally, internal service funds get included as a separate column on the government-wide financial statements. We would, of course, have the internal statements about that particular internal service fund, and then it would be an additional column. If it was a large internal service fund, we would have each fund listed separately, and if it was not a large internal service fund, then we would put multiple internal service funds together on that external reporting for government-wide activities. Okay. If we decide we no longer need this internal service fund, then we would dissolve the internal service fund. There are 3 ways to dissolve an internal service fund. One is we transfer all of the assets to another fund that's going to continue the activity. 2, we would convert non-cash assets to cash and distribute those out, or we would distribute assets to another fund. Much like a business being dissolved, if we decide to dissolve an internal service fund, any financial obligations that exist because of loans or various creditors should be paid. Okay. So we can have conflicts between fund managers and legislators. So internal service funds have to be created through a legislative process, just like every other activity involving governmental funds, use of taxpayers' money, use of public money. We have this example in the book where legislatures may feel that they lose control of the fund since the fund has the ability to run itself as a business. Under a traditional type of accounting, each individual service or fund within the organization would have to submit their supply needs for the year as part of an appropriations and budget process. Internal service funds are not required to go through the legislative budgeting process because they are meant to generate their own revenues. By not going through this process, legislatures may feel that they don't have control over how this internal service fund spends their money. They don't have the control in the same way. This may discourage them from approving the creation of an internal service fund, even though it helps the government save money and operate better as a whole. Okay. So internal service funds can be used as manufacturing activities. They can be used to just run things, provide services such as IT does. They can be used to purchase goods and services like a purchasing department would in purchasing and distributing supplies to various departments within the government. They do have to provide different types of accounting dependent on the different process of the internal service fund. For example, if the internal service fund does a manufacturing activity, then they have to use cost accounting standards and rules as part of that activity. Additionally, internal service funds can be used to finance risk management, do equipment purchases, and operations and other functions. If they are a risk management internal service fund, then they're subject to the same basic guidelines as public entity risk pools. We haven't talked a lot about risk management and using risk pools yet as part of government entities. We're going to talk about that a little bit more in future chapters. But The main thing is that the internal service fund charges should be sufficient to recover any potential total amount of claim expenses recognized for the period. Okay, and they can include amounts to provide a cushion for future catastrophic losses. Okay, in our next video, we're going to talk about the other type of proprietary fund, which is the enterprise fund.